The US government borrows money to pay for things like roads and schools when taxes aren't enough. It does this by selling Treasury bonds, essentially IOUs, to investors worldwide. As of April 2025, US debt was $36.2 trillion, with over $8.5 trillion held by foreign investors. US debt links economies worldwide, making it a cornerstone of the global financial system. Next, let's see why countries are so eager to buy US debt. Stay tuned. Why do countries buy US debt? First, safety. US Treasury securities are considered a safe haven, especially in uncertain times. When global markets get shaky, investors flock to US debt for security. It's like putting your money in a sturdy vault during a storm. But it's not just about safety. US Treasuries pay interest, providing a steady, reliable return. For countries with low or negative interest rates at home, US bonds are an attractive option. Export-heavy countries like those selling lots to the US accumulate US dollars. Instead of letting those dollars sit idle, they invest in US Treasuries to manage reserves and support the dollar's value. Holding US debt also gives countries a tool to stabilize their own currencies. Central banks can sell US Treasuries to buy their own currency if it weakens, helping to keep exchange rates steady. It's a financial toolkit for managing national stability. So, countries buy US debt for safety, returns, reserve management, and currency stability. It's not about getting rich quick, it's about smart, stable financial management. That's why US debt is so popular worldwide. Even countries with strong economies see value in holding US Treasuries. The global demand for US debt keeps the system running smoothly. It's a win-win. The US gets funding, and other countries get a safe, liquid investment. This interconnectedness is what makes the global financial system tick. Next, let's see if Malaysia is part of this global club. Spoiler, it is. Let's find out how. Stay with us. Does Malaysia buy US government debt? Absolutely. Malaysia holds US Treasury securities as part of its financial strategy. As of early 2024, Malaysia's holdings were around $200 billion, a significant sum. These holdings fluctuate as Bank Negara Malaysia manages reserves based on economic needs and market conditions. Why invest so much? US Treasuries are a key part of Malaysia's foreign exchange reserves, a national savings account in various currencies and assets. These reserves help cushion economic shocks and maintain confidence in Malaysia's economy. Holding US debt ensures liquidity for international trade, earns a stable return, and helps manage currency risks. It's a strategic move, not just a stash of cash. For Malaysia, US Treasuries are about stability, flexibility, and economic security. This investment supports trade, protects the ringgit, and underpins Malaysia's financial health. So, Malaysia's $200 billion in US debt is a smart, calculated part of its economic toolkit. Next, let's see how Malaysia's holdings compare to the world's biggest players. Onward! When it comes to holding US debt, some countries are true giants. As of early 2025, Japan held about $1.06 trillion, and China around $759 billion in US Treasuries. These numbers highlight the deep financial ties between these nations and the US. Malaysia, with its $200 billion, is a mid-sized holder, not in the top 10, but still significant. For context, the 20th largest holder might have around $97 billion, so Malaysia's position is notable. The reasons for holding US debt are similar across countries: safety, liquidity, and returns. For big exporters like Japan and China, US Treasuries are a logical way to invest their trade surpluses. For Malaysia, these holdings represent a major part of its foreign reserves and reflect its role in global trade. The scale may differ, but the motivations are universal. Even if Malaysia isn't a heavyweight, its strategy is prudent and impactful. US debt holdings are about more than size, they're about smart financial management. Malaysia's approach shows it's a savvy player in the global economy. Next, let's dig into why US bonds are so central to Malaysia's strategy. Let's go. Malaysia holds US Treasury bonds to build and protect its foreign exchange reserves, its financial safety net. These reserves are managed by Bank Negara Malaysia and include a mix of currencies, gold, and liquid assets. US Treasuries are favored for their safety and liquidity. They're easy to buy, sell, and rarely lose value. Holding US dollar assets helps stabilize the ringgit, especially during currency swings. If the ringgit weakens, the central bank can sell US Treasuries to support it. Safety and liquidity are key. U.S. bonds are low risk and can be quickly converted to cash. For a central bank, these qualities are essential for handling economic shocks or urgent payments. U.S. Treasuries also offer diversification and a steady, if modest, return. Earning interest on reserves is a bonus, even if profit isn't the main goal. Diversifying across currencies and assets reduces risk and strengthens Malaysia's financial resilience. By holding U.S. bonds, Malaysia supports long-term economic stability. It's about more than just returns. It's about safeguarding the nation's future. This strategy helps Malaysia weather global storms and maintain confidence at home and abroad. Next, let's look at recent trends in U.S. debt holdings. Stay tuned. The global financial landscape is always shifting, and so are countries' U.S. debt holdings. Since mid-2023, major holders like Japan and China have adjusted their U.S. Treasury portfolios. China's gradual reduction reflects a desire to diversify reserves and respond to trade dynamics. Japan, still the top holder, has made tactical moves, sometimes selling bonds to support the yen or adapt to changing interest rates. Malaysia, too, adjusts its holdings as needed, though on a smaller scale. The $200 billion figure is a snapshot. Bank Negara Malaysia constantly reviews its portfolio. Adjustments can be driven by cash needs, interest rate changes, or diversification strategies. Rising U.S. interest rates can make new bonds more attractive but also lower the value of older ones, prompting some countries to rebalance. Geopolitical factors also influence these decisions, as countries manage exposure to global risks. Overall, reserve managers are navigating cautiously, balancing safety, returns, and flexibility. These shifts show how dynamic and interconnected the global financial system is. Next, let's turn to Malaysia's own domestic financial scene. While Malaysia manages its international finances, it also faces domestic economic challenges. One big trend: a surge in buy now, pay later, BNPL, credit. By December 2023, over 5 million Malaysians were using BNPL. In 2024, Malaysians spent about 12 billion ringgit, roughly $2.7 billion, through BNPL, nearly double the previous year. While BNPL debt is a small slice of total household debt, its rapid growth has caught regulators' attention. Slow wage growth and rising living costs add pressure. Wages grew just 2.9% in 2024, while food prices rose 2.5%. Many turn to credit to manage expenses, especially lower-income groups. The government is responding. In June 2024, a Consumer Credit Act was proposed to regulate unsecured credit and protect consumers. The goal: responsible lending, transparency, and financial stability. Managing domestic debt is as crucial as international strategy. Malaysia's policymakers must balance both to ensure economic health. Next, let's connect these domestic trends to Malaysia's global investments. Let's see how it all fits together. How does Malaysia's domestic debt situation relate to its U.S. debt investments? High household debt can limit consumer spending and slow growth, pushing policymakers to balance resources between domestic needs and foreign investments. Building strong foreign reserves like U.S. Treasuries is vital for external stability, but supporting the domestic economy is equally important. If domestic challenges intensify, the government might shift focus to local support or debt relief, moderating foreign asset accumulation. Still, holding U.S. debt signals financial strength and helps stabilize the ringgit, supporting trade and import costs. The key is balance. Malaysia aims for a holistic approach, weighing global and local priorities. U.S. debt holdings support currency stability and international confidence, but must be harmonized with domestic needs. These strategies are interconnected, not separate. Prudent management means adjusting as circumstances change. Next, let's see what all this means for you. So, why should you care about Malaysia's U.S. debt holdings? These decisions shape the stability of the ringgit, the prices of imported goods, and the resilience of Malaysia's economy. Strong foreign reserves help protect against shocks and keep the currency steady, which means more predictable prices for everyday items. A stable financial system supports jobs, public services, and economic growth. The global web of debt and investment connects decisions in Washington to daily life in Kuala Lumpur. Malaysia's strategy is about safeguarding your economic future, not just abstract numbers. In a deeply interconnected world, every financial move has ripple effects. The balance between global investments and domestic priorities affects everyone. As economies become more intertwined, understanding these links matters more than ever. So next time you hear about US debt or foreign reserves, remember, it's not just about governments, it's about you. Thanks for watching and keep questioning how the world's finances shape your life.